have to put 20% down before I can buy a house, and I just don't have that amount of money. And 5 other crazy myths people have around mortgages. Let's talk about that. Hi, my name is Tonya Byrd, and I am with Keller Realty, Atlanta Partners in Peachtree City, Georgia. And today we're going to cover 6 crazy myths that sometimes people get jumbled up in their minds. So let's get started. Number 1, I have to put 20% down, and I don't have 20% to put down. Well, the fact of the matter is that no, you don't have to put 20% down. There are several loan products that are out there that you can put as low as 3.5 or 3% down as a payment. Also, if the home qualifies and you also qualify for a USDA loan or you qualify for a VA loan, both of those loan products, you don't have to put anything down for a down payment. And then there's this thing called gift funds. So some people take advantage of the fact that their family or their friends can actually give them money so long as they can document getting that money and it's approved by the bank. They're actually gifted the down payment so that then as a gift they don't have to bring anything to the table because somebody's giving them the money to make the down payment. Myth number 2. I can't afford an agent. Well, you just need to mark that one off your list because you can afford an agent because most buyer agents' commissions are paid by the seller. So go out there and find yourself a good buyer's agent to represent you. Number 3, but my credit score is low. You might be surprised, even if your credit score is a little on the low side, what you can actually get approved for. So the first step is to call a lender and find out. And don't wait. Get busy at finding out now, because the quicker you can find out where you are, the quicker you can do something about it. So even if your credit score isn't quite there, a good lender can advise you on how to quickly get that credit score up in a matter of time so you can get qualified. Or maybe you find a co-signer who can help out, or maybe you have a lot of cash on hand that you can actually put down more cash so the bank's willing to take a little bit more risk due to your credit score. You also might be able to find some special financing out there, such as owner financing. So you just gotta kind of think out of the box and not let that credit score scare you. Number 4. But my bank, I know, will absolutely give me the best deal. So there is a lot to be said about banks and customer service and it being your local bank, and maybe you really know them well and have comfort with them. That does not mean they're going to give you the best deal on a mortgage. You really need to shop around. You need to shop around to 2-3 other people. Compare all the fees that they charge against one another. Compare interest rates and really understand what it costs to get a loan and understand what you're paying for. So really get out there and compare apples to apples because you may find that your bank's not going to give you the best deal. Number 5. I got pre-qualified and so I got the loan. Hold on there. Just because you got qualified does not mean that you have the loan. There's a whole lot that goes on from pre-qualification, which typically means that they run your credit and that they have not verified your income or your debt yet. So there's a lot from that point to actually getting under contract, to turning over the necessary papers to go through the approval process, to getting the home approved, to now you're sitting at the closing table and you're signing the loan document. So a whole lot between point A and point Z that goes on. That's why you need to go back up to step number 2. Make sure you're hired a good agent to help you navigate through these things. Number 6, interest rate is the only thing that I care about. It is the most important thing. not so fast. This is again where you need to start comparing apples to apples and company to company. Just because you get a great interest rate with one company does not mean that their fees are not spiked up on the loan origination and processing side of things. Or if you get really, really low fees, the interest rate might be higher. That's where APR comes into play. So in order to be able to truly compare apples to apples, check out the APR, because not only does it include the interest rate, it includes all those loan origination fees and processing fees and all those other things that banks charge. So if you need help navigating mortgages and other real estate myths that might be out there, please reach out to me if you're in the greater Atlanta area. And if you're not in the greater Atlanta area, reach out to me anyways, because I'll be glad to help you find a great agent in your area to navigate these things. Please subscribe and like and give thumbs ups, comments, ring that bell to get notifications for when I create more videos like this, and I will see everybody next time. Bye.